All right. Good morning, traders, and welcome to the opening bell. Today is Tuesday, June 24th, and I'm Michael Boutros, Senior Technical Strategist with Forex.com. Pleasure to start off the day with you. What a reversal day it was yesterday. We got a lot to cover. Dollar seemed to have been making a break towards the high. We were checking the monthly range highs right here in the webinar yesterday, guys. And it reversed right into the close of the session, right after this webinar, actually, and just took out support, and we're sitting at critical support. We haven't broken yet. Euro is at resistance still. Sterling's at resistance. Aussie dollar whiplash right back and put us right back in that godforsaken range. Dollar CAD breaking down from resistance. Dollar yen breaking down from resistance. And dollar Swiss with the only one that gave us a clear-cut directional break so far. We'll go over all of those and gold and Bitcoin and oil in just a moment. Any questions or trade setups, guys, feel free to throw them on the message board. We'll be getting started in just a sec. All right. Good morning, everyone. Great to see you guys in the room. Angie, Dan, Jake, Mesvin, Patricia, everyone. Good morning to you all. Here's what we're looking at into the start of the session. Obviously, news overnight broke that a ceasefire had been negotiated between Iran and Israel. Wake up this morning, ceasefire had been broken. Seemingly, I guess Iran or Israel had perceived a launch, and so they launched, and then you got a whole barrage of back and forth commentary this morning. You know, Iran at one point saying they're going to relaunch their nuclear program, and everything seems to have calmed down again. The latest tweet seems to suggest, or the latest truth seems to suggest that things are simmering down, that the ceasefire is back on again. Very fragile situation. Nonetheless, the markets are taking no part of it, and we're continuing to rally. So all three major equity indices are higher across the board. The dollar reversing course completely yesterday. So recall, we've been working under the assumption that we're threatening a breakout of the January downtrend. Yesterday, we were testing the objective monthly open. That's what those dots are. Again, that was 99.40 with the 2023 low at 99.57. We wanted to see a breakout of that zone to validate this multi-month downtrend breakout. Didn't happen. And in fact, not only did we reverse course, we made a massive outside daily reversal, taking out the previous session's highs and closing below the previous session's lows. And we're right back into key support again, 97.71, 98.38. Guys, it's the same level we've been talking about for months and months and months. We're still there again. So while that move does look like a sheer clear-cut rejection of the monthly open, the monthly range highs, we still have not broken support. And that's the frustrating thing. Typically, when you get a rejection of resistance like that, you get, okay, clear-cut directional move, trend is still down. Well, I can't do that here because it takes us right back into support. Again, this is long-dated 618, 2018 high, clear pivot in price, downtrend support. It's all still right here, uptrend support. It's all still right here. So what do? Well, it puts us in a little bit of a pickle. Here's what it looks like on the 4-hour chart. So again, right into resistance, June open, 2023 low, reversal right off that level. Takes us right back into support, monthly range lows, 97.71 is the level you need to clear on a close basis to validate this breakdown. Okay, it was a mean reversal, no doubt about it. We still haven't broken support. So what does that mean for euro? Here's what euro looks like. Everything, you know, not everything. There's a lot of ugly setups on the board today. Here's what euro looks like on the daily chart. Yesterday, right into support. Remember what we were talking about in the webinar, 1455, right? Boom. Reversal right through the objective weekly open, right through near-term resistance. I was telling you guys yesterday, if we are heading lower in euro, we wouldn't want to see rallies surpassing 1560, 1585, the objective high day close for the year. Not Mike Boutros' opinion, not Forex.com's opinion, fact. Well, we broke through it and we closed above it. Actually, excuse me, pardon me. We did not close above it. We're right there. We're testing it right now. In fact, we closed right below it yesterday. So today's stretch stretched into the 2016 high at 116.16 and pulled right back. We're still right here. So DXY at support, euro dollar right off resistance. Now, in euro specifically, if we're heading higher on this stretch, if we're going to go for the breakout on this pullout right here in New York trade, I'd want to see support at 1560. Just be a very nice breakout, channel resistance, test of channel resistance as support, and move off. So that's kind of my line in the sand. We'll see how this materializes in today's US trade session, but euro at resistance, dollar at support. Sterling at resistance. Now the sterling is one of the most radical ones because this one, remember the whole focus here, and actually it ended up being the best play. The whole focus here into the start of the week, remember we were talking yesterday in the webinar, we said, look, it's breaking support, but there's the 618 just lower. So if you're not already short, not necessarily looking to get short, but looking for downside exhaustion in the pound. Well, it didn't even give us a day, right? It happened yesterday. Reversal closed well above. That is a clear-cut defense of support, of uptrend support, the 2024 high day close, really nice pivot in price, but we're still below resistance. And that basic level is the June opening range. High is 136.16. The high close is right there as well. It was materialized right here on June 12th, and that high close is 136.14. You can see that right there. But you get the picture. That's the level that we need to give out to really fuel the upside in the sterling. Sterling, again, on the weekly charts, taking you backwards here, still on that upslope. This is the 6th week along that upslope we've been watching in this weekly chart. So not clear yet on the British pound at resistance, euro at resistance, dollar testing support. Aussie, man, if you heard me yesterday in the webinar, I was like, might have gotten a little too excited. Because it looked like we were finally breaking this godforsaken range, the monthly open, the monthly opening range lows, the 200-day moving average, all of it stacked up right here at 64.30. We were well below that during our webinars yesterday. Again, completely failed. Reversal closed well above on a closed basis. Looks like it never even went. Puts Aussie right slap in the middle of the range again. Near-term resistance, 64.94. We're basically testing it right now. It's the July low day close. I'm sorry, 64.97. The July low day close. So unbelievable, right? Right back in it. Here's what it looks like on the 4-hour chart. Really ugly. A possible slope that's in play here. This is a pitchfork off the objective high, low, high. From specifically May 6th, the low on May 12th, and then the subsequent high that we made into the June rally. The median line may have caught support, still puts you at resistance below the high day close, 65.24. That's what I'm looking for. Oops, here in Aussie. Key resistance, still 65.50. Remember Aussie on the weekly chart. Same resistance zone, very akin to what we're seeing in sterling. Same resistance zone we've been testing for weeks. 65.11, 65.50. There's the weekly reversal we're making so far. Still holding resistance. Daily chart, still holding resistance. Initial resistance, 65.24, 65.50 breakout. Initial support, weekly open, 64.50 right here. Need to close back below that same level we talked about yesterday. Monthly open, 200-day moving average, all that good stuff, 64.30. That close and break, again, would put me back on the potential for a pullback here. But right now, focal range break is 64.50 at 65.25, 65.24. Questions on euro? Dan, my humble point of view, recent euro dollar moves seem to be more about euro strength than US dollar weakness based on other pairs like euro CAD, euro Aussie, seems to be pushing upside exhaustion on euro more generally speaking. So I agree with you that the threat for upside exhaustion still remains. Why? Because we're below resistance. Not sure I agree that it's necessarily mostly a euro move. You might be seeing that move across the euro crosses, but look at sterling, man. That's dollar weakness. Look at Aussie. That's dollar weakness. Look at dollar CAD, which is what we're going to go over next. That's dollar weak. So I wouldn't necessarily agree, Dan, that this is a euro move centric with what we're seeing in euro dollar specifically. But the upside exhaustion is very viable because we're still at resistance. Let me know if you want me to look at euro Aus, euro CAD. I haven't been tracking those, but I can throw it on the list. And euro Aus. If you want to take a look. Good morning, Michael. Can you please take a look at Bitcoin and Kiwi? Absolutely, Sandra. Let me just walk you through a couple more dollar crosses. This is the one that's been our most favorite setup. This is the one that I've been most, closely tracking for the last, 2 weeks. So we rallied into, and the big resistance zone that was here yesterday, and this was a welcome reversal, was 137.98, 137.94. The objective may open. The 618 retracement. Okay, so longer dated retracement on the daily chart of the entire rally from the December 2023 low, right? Downtrend resistance. So we didn't even close above the 37.30, 37.13 pivot zone. Well, we did one day, but look at this. Look at that. So there's a lot to look at here. The 786 of the advance off of last year's September low. The 38.2 of a long dated retracement from 2021, the whole rally. The 2022 slope. See this red line? One touch, two touch, three touch. Last month, we broke below, trying to break above. So there's a lot. The fact that it went for a touch, that 618 pulled back, and then we're right back here. 37.40, guys, is the objective monthly open. Not Mike Boutros' opinion, not StoneX's opinion, fact, right? Here's what it looks like on the 4-hour chart. So there's that whole zone, monthly open, 38.2, 786. This was also the objective weekly open. So rejection at confluent resistance and slip back below. As long as you're below 37.40, the threat is for potential resumption of the downtrend. So if in the basis that the dollar breaks support or you see continued dollar losses, a potential here, right? Same with the euro. On the euro, we want to see support pretty close by. If that breakout is legit in dollar CAD, 37.40 will be the level to watch for resistance today if we are heading lower here. So another clear or interesting level for sure. Dan says euro CAD would be interesting to look at if we have time. You know what? Let's go ahead and do that now. We just looked at euro. We just looked at CAD, right? Here's euro CAD. Let's see what this puppy's doing. Breakout testing resistance right now. I don't even need to test. I don't even need to update anything. 59.40 is that 618 extension. This is off the advance from the lows that you made back in 2022. Also the high day close that you marked back in April. We're testing that as resistance right here, right now. Here's your monthly open. Okay. Looks like a monthly opening range break on the 13th. Looking for a late month high. This is resistance. Looking for a reaction at 59.40. Let me check the weekly chart for a sec. Hold on. Oh, it's the same level we're watching, 59.40. Coming back from overbought condition there. Still below overbought condition there. right below overbought. Yeah, this is a big inflection zone. Watch. Listen, 59.40 is the lateral level objectively. Again, wash my hands of any type of bias, but it's the slope that we've been tracking here that would be like your accelerated like breakout mode. That's what would clear the way for the next major leg of the advance. Look, you're looking at multi-year highs. The 2018 highs are a little bit higher up. The high close is right here. Oh, damn. That's also the high week reversal close. Let me highlight that. That's pretty cool. Woo-wee. Same exact, right on mark. That's the objective 2018 high. So these are the levels I kind of be giving most weight to. This is the weekly chart. So we put a little bit more merit on this, right? 59.40 is the lateral level. 59, what's the actual level? 59.30 is the 2018 high week close. You've got all of these spike highs. You've got uptrend resistance. So this is the lateral level I would give merit to as objective. The next one up would be 60.95 into 61.50. That clearing would be extension breakout. Like you're looking for potential for a couple hundred pips on the upside. All of that is being marked by the fact that momentum is crawling up into 70. So the trigger, as it were, obviously not a trade recommendation, forex.com or StoneX, but if you were to get the break into overbought territory with a resolved close above that slope, above this zone, that's when you would expect to see the sort of the extended break. But this is a big lateral level I'd be paying attention to. So what is that? That's Euro CAD at resistance. That's Euro at resistance. You'd need CAD weakness or Euro strength to drill through this, right? Dollar CAD is now testing near-term support, right? On the intraday chart, let me get you back. And Euro is testing near-term resistance. So the setup is there, right? If you get a directional break of one of those before the other, that might put EuroCAD in play. Right now, all things held constant, you're at resistance. Dan, does that help? Dale saying, good morning. Can you please take a look at Euro Yen? Absolutely. Yeah, we talked about Euro. Let me cover Yen real quick. So check this out. We did dollar CAD. It's up on tap. Let me do the Yen real quick, and then we'll jump into Euro Yen. Here's what dollar Yen looks like. Again, unbelievable yesterday. The formed break looked like it was 146.15. Recall the swing highs from last month and the objective 618 of last month's decline. We rallied on Friday and closed right below there. Guys, this is what it looks like on a closed basis. You can't make this stuff up. You can't make this stuff up. This is why we stress the closes. This is why you always hear me in all my reports saying, watch the daily close on the daily charts, watch the weekly close on the weekly charts. We can't make any major assertions until those closes solidify the breaks. Every single one of those double back yesterday. So even though, right, dollar yen reached an intraday high at 148.06, we still closed below 146.15. Or literally it was at 146.15. What was the close? 146.15, literally on the mark, right? So here's the thing with dollar yen. So that was a failed breakout of the 618, failed breakout of that swing high. This pullback now testing former downtrend resistance as support. This formation has been pretty decent. We haven't changed it since like January, guys. Median line support, median line break, 25% parallel support, median line pivot, upper parallel resistance, right? Here we are, checking this as support. So even dollar yen on the pullback, testing initial support. Here's what it looks like on the 4-hour chart. So we're below the weekly open, we're below that 618, we're below that pivot zone. If dollar yen still has any hope or is heading higher still, the 618 of the rally, the June open gives you 44.06, 44.37. That's support, key support. Break below that would suggest resumption of the downtrend. Okay, that's dollar yen. Initial resistance right now, 45, 46, 47. Basically the objectives June opening range highs that look like it broke on Friday. That's now a near-term resistance. Bearish invalidation, 46.15. If you make it back above the weekly open, you make it back above that pivot zone, that would suggest this was just some sort of mean near-term washout. Look for the build for that breakout to continue. So this literally could either go either ways. This is like make or break for dollar yen. And that's why the yen crosses for me, especially like the Widowmaker, pound yen, and those type of extraneous pairs, super risk here, right? Super risk. I mean, pound yen, that thing rallied into resistance again yesterday, closed above this major key pivot zone for the first time in the objective yearly open, but failed right at uptrend resistance. You see this? This is the same chart I showed you guys last week. Do you see where it failed yesterday? Insane, insane. So if this breakout is legit, this one didn't double back and close below 96.70. Again, the objective yearly open, the December high week reversal close. So if this breakout's legit, I'd want to see support ahead of that zone on pound yen. So jumping sideways, Dale, into your question, thanks, much appreciated. He said, you're more than welcome. Let me hit it first before your thank you. Here's euro yen on the weekly chart. Okay. Well, that's a major breakout, isn't it? That's the 618 retracement of the entire 2024 drop, the 2024 range. We're still trading within. That's the 618. Okay, let me check out the weekly real quick here. This was a big pivot. That was a big pivot, and we actually closed above it last week. So 67.40, 67.67. I'd want to see support there if this is heading higher on this stretch. Bear with me one sec here. Who's this for? Dale, bear with me one sec. Let me just do some on the fly here for you. Okay, if we use the objective low, high, low from the lows they made back in 2024 in August specifically, another sort of another piece of evidence that would suggest there's some sort of breakout underway here puts you over the median line. It's too close to call, Dale, but you basically want to see support like right here. Still, the 618 is going to be your first objective lateral. Remember, slope subjective, lateral levels objective. So, you know, right here would be great if we find support at yesterday's low, but the first lateral level would be 67.40. Now, if we drill down even deeper and see if there's anything on the near term here. Okay. Bear with me one sec. Okay, weekly open just looks like we might have be sliding below. Yeah, the risk for exhaustion is there. If this is a legitimate breakout, pullback should be limited to 67.40. Your next level up There is a pivot there at 71.61, but let me see where the 786 comes in. It's going to be pretty close, 70.93. So let's call it a 71 handle on the upside. And one last marker. The extension of the advance here. Yeah, look at that, 67, 60, 67. Again, even the 100 off the low. If this is a breakout, you'd want to see support ahead of that. Something to look at there on euro yen. Quite interesting. Wouldn't be my favorite setup in the account that you've already sort of made the breakout, and now you're looking for support on this pullback if the breakout's legit. But this looks like an objective break of the yearly opening range, which should suggest you'd be looking for a third, fourth quarter high, right? Really objective stuff. Dale says, I was looking on the near term. Okay, you're looking on the real near term stuff. So from the near term front, you're actually just knocking on the door for the objective weekly opening range lows. Let me drill down even deeper. Here's the 60-minute chart, right? Here's your weekly open. This is why having the weekly open marker, guys, can be very helpful. It's just a really quick way. Where do we start the week? Where is this thing going? Here's your weekly open. Here's your Sunday low. Here's your Monday stretch. Objectively testing the weekly low right now. Break below the weekly open on a closed basis on this hourly chart, move below 30 in momentum would be a break into oversold territory and a near-term risk for further losses. Make sense, Dale? You're sitting at support right here at pivot, right into the start of the session. It's the same exact trade. Euro at resistance, sterling at resistance, Aussie at right below resistance, dollar CAD sitting at resistance. Dollar Swiss, we didn't go over this one. I just wanted to show you, this one was actually the only one that didn't give us much of a fake out. Recall, even though all of those trades were massively swinging yesterday ahead of the US Open and into the US Open, Dollar Swiss held its own, really tight range, just went with the pullback, never went with the dollar rally, just went with the dollar losses, and it kind of materialized. So we're right back, pivoted below 81, keeps the focus on a possible stretch towards 80.60, which is still key support. Still key support. Whoops. There's 80.60. It's the exact low that we tagged, even on the daily chart, even on the weekly chart. All right. Okay. We are getting right into the end of the session, but let me hit these commodities real quick. Let me know if you have any other questions. I think I got everyone's question. Oh, Kiwi CAD for Sandra and Bitcoin. Okay, we're gonna run a little over, guys. Thanks for sticking that with me. Really quick, Bitcoin. I've been covering this with you guys daily. We got a nice rebound off that level yesterday. There was the support that we talked about, 98,740, 97,640, 650 rather. The low was right there on Friday, or was that Sunday? Here's the Monday stretch. Bounce right off. It takes us back above the objective monthly open, but we're still mid-range for the June trading calendar. So not out of the woods yet. Same levels apply, 109.35, 111.8, 116. That's the breakout, key support, bullish invalidation. So if this is corrective, you would have wanted to see that 100 hold, and it's exactly what we got. So now the onus is on the pivot back above, 111.816. That's the high close, by the way, to validate on the daily chart, at least the potential for a breakout and continuation. Sandra, does that make sense? Sorry, I'm losing my voice here. The other one was Kiwi CAD. Okay, you can see I obviously have not been tracking the, wrong set of charts. Sorry about that. Okay. Yeah, so you're straddling that 200-day moving average basically for the last 3 months. Looks a lot like, almost similar to an Aussie chart. Yeah, this is chop central. Sandra, I'm just gonna be completely frank with you. I have no business on this trade. That would be no interest for me. There's so much to work. There's so much things working against you. First of all, let me take a step back. It's a range trade. If you're range trading and you're near-term trading, have at it, right? Um, Directionally, technically, from a trend base, this is a mess. This is a mess. Why? You got the 52-week objective yearly moving average, which you've been straddling for the last like 10 weeks, but you haven't closed above at all. Now you're going for a move there. This is the weekly chart. Nothing matters till the weekly close. So I can't validate that that's a break, but you can see basically you're testing the yearly moving average here. So I don't know what you'd want to do with that. I wouldn't want to buy here. If you want to try to short it and get the same wicks that you've been getting, might be worth it. But again, not my cup of tea here on a reversal of that magnitude to try to necessarily fade that. Take a step back. Momentum is still above 50, at really close to 50 though, so that's not helping. Take a deeper look into the daily chart. Forget this slope, that's outdated. But here's your 200-day moving average, which you've been straddling again for 3 months. So what do you want to do here? Again, range trade, sure. You're trading pretty close to resistance, right? Could be consolidation high, could be something of that magnitude. Looks like a rejection of range, so that makes sense. But I like to trade things that are a little bit more clear from a technical standpoint, from trend basis, and there's not really much here to look at. We're forcing it. You know, this might be a good opportunity to take a look at Kiwi, actually. Sandra says that's clear. Yes, thank you. I'm sorry, Sandra. I love it when the setup just pops up and I can give you a conviction answer, but this is just, that's messy. Again, short-term guys, they're range trading this all day long. But on a stretch like that, I wouldn't necessarily want to get right back into the range trade type of mentality. Kiwi dollar. Is right at resistance, right? That's 618. This is the 618 of the yearly drop from last year. Okay, so at least on the weekly chart, this is what I remember looking at with you guys a couple of weeks ago. Someone asked about this 63.37. I'm sorry, 60.37 into 60.33. It's the May 22 low week close, major pivot for those last couple of years, downtrend resistance, and it's also the 618 retracement of last year's decline. You can see for the last 4. This is the 5th week. We're still holding right below resistance. So what that portends for Kiwi CAD on that breakout, well, Kiwi's at resistance. So if you get a resolved close above 60.37 here, that might be the fuel you need on it. But for all intents and purposes, Kiwi's right at resistance right here. All right. I think I hit everyone's questions. I'm going over on time. Fed Powell's testimony starts right now, guys. So just as a heads up, keep your eyes on X. I'll try to keep you updated on that with any commentary that comes out. Also, by the way, you should be all following Forex.com, which is Forex.com's handle on X as well. A lot of the commentary we dropped there as well. We got a whole team of guys doing that. So last but not least, really quick, just touch on gold. The support level we talked about broke. That's initial drawback. The potential now is for a deeper cut towards the weekly chart gives you 32.47. But ahead of that, I just wanted to show you, here's the daily. Okay, 32.89 is going to be the objective June open. It's also the objective May open. So from a lateral standpoint, objective, and it's also uptrend support for this slope that we've been tracking. So remember the daily chart, support twice, thrice, 4th time, that converges right on the monthly open. So that's your first support hurdle in gold, right? Beyond that, you're risking that deeper cut. 32.47 is the 618 of the rally. I'm not sure why I don't have that here, but 32.40 is the objective 528 swing low and the May low day close. So both levels of interest for possible support. The first one upcoming here at the objective May range lows, May open, June open, June range lows, May open, and that's right here at 32.90. So look for a possible inflection zone there. Oil, can't leave without talking about this real quick. Complete collapse. So the level we talked about at 68.65 that would have needed to hold if this breakout was legit, yep, it gave way. One of the largest single day declines that we've seen in a long time. Well, that's consecutive count. Let's just see rate of change. Largest single day loss since like 2022, okay? And here's what that instance is. You saw a pretty big recovery temporarily, but it didn't last long, right? Didn't last long. What was that recovery? That was like a 9% recovery, but recovery nonetheless. So my point being is big collapse. We closed below the pivot zone that we needed to see close to invalidate the breakout that we saw, and it puts things so perfectly on the weekly chart. Check this out. We just checked downtrend resistance, and we're right back into downtrend support. Insane, right? Insane. Full on. Everyone was bugging out, and I kept on saying, like, again, this is not me. This is the market's levels. We're just looking for them, right? We kept on saying, look, the downtrend just hasn't broken yet, period. End of conversation. Like, great rally. It was a major breakout. Absolutely. But we're at downtrend resistance. Here's the first test, okay? The 618 retracement gives you 63.83, okay? Right ahead of that, right here, right now, we're testing the median line, okay? And then a quick upslope from the lows from last month. Not putting too much of emphasis on that, but it further highlights 63.83. So levels to keep in focus. 63.83 initial support. A break below that, the low day close for the year is 62.70. Critical support, monthly open, 60.77. All objective levels. All objective levels. Initial resistance, 66.31. Bearish invalidation, 68.65. So if we mark a close back above this again, you're talking about the potential for like some sideways chop that's going to be just really frustrating. So those are the levels mapped out. In my humble opinion, the technicals look pretty clear as far as the oil reversal is underway. All right, I'm way over on time today, guys. I thank you for sticking it out with me. I hope I got everyone's questions. Stay prudent here, okay? There's still a drip about this whole thing in the Middle East that we're going to be continuing to look at. We do have key inflation coming out of the United States still on Friday. So core personal consumption expenditure, the Fed's preferred inflationary gauge. We have Fed testimony today from Powell and tomorrow before the House and the Senate. So we'll try to keep you updated as always on X. Remember, David Song will be up with the closing bell at 4 p.m. and I'll see you tomorrow morning, 9:30 Eastern for another episode of the opening bell. Best of luck trading, guys. God bless. See you tomorrow.